You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. The futures markets can be downright scary. Limit up, limit down. What the heck is RBOB anyway? Are they going to dump a truckload of soybeans on your front lawn if you click the wrong button? Come to think of it, maybe you should just stick to your comfort zone. Or you can break out of it with the Futures Rundown. The Futures Rundown is here to help you make sense of these scary markets. We'll analyze all the top futures trading activity, explore the ins and outs of your favorite products, explain exactly how futures work, and hear from leading experts in the futures markets. We'll even tackle all of your wildest futures trading questions. If it involves futures, then you'll hear about it on the Futures Rundown. And now, it's time to break into the futures markets. It's time for the Futures Rundown.
All right, everybody, that music means we are back once again. It is time to talk futures. It's time once again for the Futures Rundown. My name, of course, Mark Longo from theoptionsinsider.com, as well as from the network. Reminding you here at the top of the show, if you want to get the full network, make sure you subscribe to it wherever you get your favorite podcasts. And, of course, if you want to go above and beyond, you want to join us for awesome pro Q&As, options oddities. You want to win fabulous prizes like our buddy Chi-Town Indy did just today. Get your name in the hat for the November Pro Trading Crate. Theoptionsinsider.com/pro is the place to go to learn more as we learn who's joining us on the old Futures Rundown this week. I'm pleased to welcome back on. The internet gods did not smile upon him last week, but he is back and looking quite sharp, if I do say so myself. Quite the snazzy dresser this week, none other than our good friend, Mr. Dan the Man Gramza from Gramza Capital Management. Dan, I feel underdressed. I forgot my tie, sir.
There you go. I just came out of a meeting, but great to see you, Mark.
Great to see you, too, and it's great to see some futures action. So let's get down to business and into the trading pits.
It's time to break down all the action that's lighting up the futures markets this week. What's limit up and what's crashing and burning? Let's find out. It's time to enter the trading pit.
All right, everybody, welcome to the trading pit, the portion of the show where we break down what the heck is trading out there and a lot of things lighting it up to the light side and to the dark side. We'll get to all that in a second. Before we get there, Mr. Dan, sir, what is catching your eye and lighting up your tape in the futures markets this week?
Well, we got a lot going on. It's really been an interesting, I'd say, week. And actually today, if we look at the stock market, we're looking for follow through to the upside in those indices. We look at currencies, the U.S. dollar stays dominant, although we're seeing some evidence of buyers in the Aussie dollar and the British pound. But overall, the U.S. dollar seems stronger for the currency market. When it comes to interest rate markets, they're down in terms of price for futures because yields are up. That makes sense. If we look at the gold market and silver, looks like we may have gotten low enough to find some buyers. Same thing holds true for copper, looking for follow through to the upside. Crude oil Sellers are still here, and I think they should be if you look at the current global supply. Nat gas also has been on a rally, but there's signs that sellers are here now. So we're looking for a down day tomorrow. Beans, well, beans, corn, wheat, they're moving to the upside as there's a certain calmness coming in with the China situation that they actually may buy some of our products. So those are some of the things I'm looking at.
Yeah, a lot to unpack there. Maybe it's time for a big adios for crude. Maybe we'll find out in a little. I don't want to put words in your mouth, Dan. Never let it be said that I forced a big adios when it wasn't merited. But I'm just putting feelers out there on behalf of our audience. I know they look for that. All right, to the weekly moves we go. What's lighting up the tape this week in the world of futures? Let's go green first. Let's keep things optimistic and happy, shall we, listeners? Number 5 on the green screen this week, it's wheat up about 4.25%. Number 4, the soybean meal. We were talking about soybeans a lot on the network last week for obvious reasons. Soybean meal coming in number 4 this week, up 5.25%. Number 3, unfortunate news for all you Starbucks aficionados out there. Coffee gaining back nearly 6% this week, 5.86%. And then we've been saying for a while, maybe you want to switch to hot cocoa. It's cheaper. Yeah, not this week. Coming in at number 2, up 6.6%. So unfortunately, all of your breakfast beverages looking a little bit pricier. And then, of course, the gas to power that stove, to cook all that stuff, also getting a little bit pricier this week as well. Nat gas up 10.5% this week. So quite an interesting array of products in our upside movers. Let's go to the downside, see if we can find some weirdness there as well. And the answer is yes, even though we have 2 segments or really one complex kind of dominating the downside this week. You could probably guess what it is. One of them is unfortunate if you've been enjoying the rally, but we'll get there in a second. Number 5 to the downside this week, it is to the metals, but maybe not one of the metals you're thinking of. We're going to get base. We're going off to copper, off 5.13% this week. Number 4 and really number 3, they're kind of a tie. We got the Bitcoin micro and the big futures giving up about 5.9%, coming in right under 6% to the downside this week. And then our big dog losers for the week, again, a product that was looking so good and that was looking terrible earlier this year and then had quite the resurgence. It was going to get our comeback player of the year award. We'll see. It still might if it can recover from this. It is Ether, the big and micro Ether futures off about 11.6% this year. So at this point, they have pretty much wiped out all of their gains for this year. They're close to flat, up slightly on the year, but it is an open question whether Ether will regain some of those highs or will continue to spiral downward. We shall see. Dan, anything catching your eye? And it's quite an extensive list. You hit on nat gas a little bit. If you have some more thoughts, have at it. Cocoa, kind of a wild one. Coffee's been on a mostly upward trajectory for a while. Soybeans are kind of interesting. And then, of course, copper and all things crypto. Anything catching your eye in those complexes, sir?
Well, nat gas, I'm a little leery of. It has been moving and it looks fairly strong, but the issue is we have a lot of nat gas. And if we think about how we use it, we use a third of it to do what you said, cook our food, heat our homes. And we use about a third of it in the industrial complex for steel making and chemical industry. They use a lot of nat gas. And the third area we use a lot of nat gas is electricity. We produce more electricity in the United States with nat gas than we do with coal. It burns 60% cleaner, but it does depend on the region of the United States that you're looking at. Sometimes coal is still a cheaper alternative. So nat gas, I'm leery of its ability to maintain this up move. So I think we should be cautious on the long side in that market. It's I don't know how sustainable it's going to be. That's the issue for nat gas. And the other ones all have, well, like you mentioned, beans. That's positive because of China and Trump's visit there. They appeared to agree to buy 12 million bushels this year, 25 million bushels per year for the next 3 years. The issue for me with that is that intent, or will they actually do it? Now, they've agreed to do it. In his first term, they also agreed to make some purchases, and he'd remind them of that. So they were fairly good about making those purchases. But in the last 4 years, they weren't very consistent. So they're back at the table. And you want to remember, it's not like United States is our only choice to buy beans. The biggest grower and exporter of soybeans is Brazil. And if you look at Brazil's production, Argentina, Paraguay, South America's done pretty well this year. And so when China goes shopping, they do the same thing we do, and they say, where do I get the biggest bang for my yuan? The quality differential between US and these other countries isn't dramatic. And so there's a cost factor, and there's also this political factor that comes into play. So those moving, and right now there's been a little more confirmation that indeed China will be buying some of our agricultural products. So that up move actually makes sense. And now, will it be sustainable? I think it will be. We're almost done with harvest. Things are looking pretty good, but I do look for follow through in that complex. So it's really interesting in terms of how it's setting up now. Can we get follow through? You mentioned coffee. That's also positive in terms of structure, but you want to remember about coffee. We're in what I call a neutral zone. We could easily go sideways from here. Buyers came in today, but follow through, we've been unable to do that. If we get above 420, we have found sellers the last 3 times we've been up here, and we're not too far from it right now. So I'd be cautious on the coffee side in terms of that type of action. And when it comes to cocoa, it's also an interesting market when we think about what it represents. Cocoa's a unique one because it only grows around the equator, just a little bit above and below the equator. So it's an interesting market. So that's where South America, uh, the Ivory Coast, Ghana, those are the big producers when it comes to cocoa. Excuse me. So there we want to keep our eye on that in terms of what's going on with them. Also, I think, a sideways move here. Even though buyers came in, I'm not looking for a dramatic move in that market. It's got, I would say it this way, the fundamentals supporting cocoa are not bad right now. So does it have an upward bias? Yes. Is it going to be sustainable? I have my doubts about that. So I think you got to be cautious when it comes to that market because of that. So the softs are interesting.
We have a
Go
question
ahead.
coming in from our live. I was going to save it till later on in the show, the futures free for all, but you're touching on it now, so you might as well get to it now. This comes from who is it? Nichols wants to know. He says Carly was fading the soybean rally last week on Twyfo. And yes, I do believe she was. She kind of pointed out that in the past we've heard a lot of good talk from China. There hasn't been as much follow through, and so she pointed out that there was an initial pop, then ended up you saw a downward move. So she was fading the initial rally. And Nichols wants to know, does Dan agree? Sounds like you don't. Sounds like you think we're seeing some sustained movement here, and you're looking for some follow through to the upside, Dan.
Yeah, and the reason I think the bias is still here to the upside, it's what we've seen over the last 3 days. 2 days ago, buyers came in with both hands, and it was a clean close. And we got expensive beans. We're above 1122. So these aren't cheap. Yesterday, did back off because of uncertainty that's out there, but buyers are right back here again. And the idea of shorting a market in a rally, there's nothing wrong with that, provided you have the risk management that allows you to survive till the next trading session. So we can always trade either side, provided we handle the risk appropriately. But no, I'm bullish on soybeans. Although Carly always has great ideas, but what makes a market is different opinions.
There we go. I think she was
And
also pointing out too that downside put premium wasn't that high for soybeans. So if you wanted to take a cheap flyer to the downside, it wasn't costing you an arm and a leg to do so.
oh, there you go, there you go. The issue then for me, if I would do that trade, is time. I'd be happy to do that trade, provided I get paid within the next 2 to 5 days. I think that's important. A lot of people say, "Well, it cost me not didn't cost me much, and I'll see what happens." When I hear somebody say that, or if they say, "Well, it only cost me 500, but we got a few more weeks to go. Let's see what happens." I feel like what they're saying is, I have a trade that's not working, but you know, I'm in a hope trade right now, and I hope it moves. The thing that's interesting, if you look at price, and it doesn't matter what mark, if you look at price and you say from a technical point of view, you have a buy or sell signal, no matter what the technique you use, whether it's candles or moving averages or stochastics. But once you have that signal, look at that chart. When do you get paid? If you have a sell signal, when do you get paid on that sell signal or on on the long side? I'm willing to bet that it's going to be within the next 2 to 5 days. And I feel that's true whether it's weekly, monthly, 5 minutes. The amount of time, I think, is a critical element in terms of managing our futures position or our options position. And we can buy time with options, right? We can pay for it and we can buy some time. But I still think that time issue of when we get paid is an important trade.
All right, let's keep rolling. Let's see what's lighting up our tape out there today in the futures market. And you know what? It's a pretty active day. We use that barometer, listeners, of around 300,000 contracts as our benchmark, our bellwether for whether or not it's an active day out there. And so far, we are well past it. Cost you 430,000 contracts in the futures market today to break into the top 10. That gets you to our old pal, the 30-year bond. Number 9, keeping it in the rates. 3-month SOFR, 461,000 contracts. By the way, all of our top 10 is all December today, so nobody wants anything shorter dated than December right now. Number 9, 3-month SOFR, 461,000 contracts. Number 8, keeping it in the rates. It's the Ultra 10-year, 495,000 contracts. Number 7, our old pal, the NASDAQ E-mini, 510,000 contracts. Number 6, back to the rates, a 2-year, 689,000 contracts. Number 5, to the micro land we go, the S&P 500 micro, 974,000 contracts. Followed by number 4, the S&P big dog, the E-mini, 1.08 million contracts. Number 3, it's the 5-year, 1.1 million contracts. So again, we're just into the top 5 and we're already past a million contracts. That's kind of wild. Number 2, the NASDAQ micro, 1.5 million contracts. That means the big dog, once again, regaining its throne. It's the 10-year, nearly 1.8 million contracts. So, Dan, a pretty dense day. I guess all it takes is the rumors of a sell-off and a little bit of red on the screen to spark some volume in the aftermath the next day, Dan.
Yeah, I think you're right. I think you're right. If you look at well, let's look at interest rates. They're behaving like they should. We're seeing yield come up a bit. And today we did have a big adios in the 10-year notes and the 30-year bonds.
Go. Big adios.
Yeah.
We need a button for that. I need like to hit a bell and like a buzzer goes off when you say that or something.
But we did. I mean, they sold it with both hands and in both of those markets. Yields moved up a bit, and we're seeing the bonds and 10-year notes responding appropriately. It's what I call a head fake setup. And they both backed off. Now, let's talk about tomorrow, though. If we finish like this today, then what do we expect? I do not look for another big day down tomorrow. Further movement lower, sure. A dramatic move lower, no, that wouldn't be expected. That is not the typical rhythm that we see in these two markets. So I think the movement we're seeing is logical. We did have a big adios kind of day for both of those markets, but don't look for another one tomorrow. But if you're short that market, nothing telling you to be a buyer. We are approaching levels where we have seen buyers before, like in bonds, in 30-year bonds. We're looking at around 115, 115.30, 116. That'd be a level to look for a possible bounce. And that could happen before the end of the week. If you look at the 10-year notes, we're kind of there right now around 112.07, '05, we could see that market also giving us a bounce. So if you're short, watch how the market behaves at those levels. That may be a sign, not that we go back up, but more of a sign that we go sideways.
Let's see where we're going for the year, listeners. We've got some gainers and some losers for the year. Let's start off to the red this time. Let's go out to our year-to-date biggest losers, our bottom 5 on the list, listeners. Number 5, it's sugar, coming in down 20.25% so far year-to-date. Number 4, it's our old pal cocoa. We were just talking about it, gaining some back this week, but still off about 24.25% for the year. Number 3, it's been a rough year for rough rice, off 26.1%. Number 2, out to the land of dairy, cash settled butter, off 44.5%. And once again, the biggest loser on the year, it's OJ. So I guess if you swap out your coffee for a little OJ, it's a lot cheaper. And certainly the sugar you're putting in that coffee right now is looking a little cheaper. And then the butter you put on your toast. So some aspects of your breakfast table looking a little bit cheaper today. Dan, anything catching your eye out there in our year-to-date losers, sir?
No, no. I would say that if you look at let's start with OJ and think about what's happening there. That's been a market that overall for this year really has been kind of in that sideways move. We had a rally, then we backed off, and we did break a bit lower, which really did kind of surprise me. But right now, I'm looking for a sideways move, not a big rally. We are finding buyers right where it is. So the bias is changing in that market. But the issue is it going to be sustainable? And from my point of view, if you and I were a buyer right about where the orange juice is trading now, where OJ is, you'd want to see the next 2 to 5 days to follow through. We want to be above, what would that be? That would be like 235 would be the objective you want to be above within the next 5 days. Right now, we're way below that. We're around 188. So we'd have a ways to go. But this market, one of the characteristics is it does have volatility, just like nat gas. Nat gas also trades in a similar way with that volatility, which makes it attractive. It's just not a super high volume market. I'm talking about OJ. So that's something to keep in mind. Rough rice is also, I think, another interesting market. We have a lot of rice, and we're seeing it reflected here. So we've seen a down move here in that market that's been sustainable. We're not seeing any evidence that buyers are coming into that market. So I think sellers are still in control when it comes to rice. It's a market that we just haven't seen any sign of buyers coming in. So if you're short, nothing telling us to switch sides.
And through the upside we go for the year. No real surprises on this list, listeners. It's pretty much the usual suspects, just a question of what order they come in. Number 5 this week, it's our old pal coffee, up nearly 43%. Again, kind of a rough year for you coffeeaholics out there. Number 4, it's gold, up 44.25%. What's beating gold? Pretty much all the other shiny stuff. Number 3, it's palladium, up 55.25%. Number two, it's silver, up nearly 57% year to date. We just had Uncle Mike, the biggest silver bull I know, on our Pro Q&A yesterday. He said he's liquidated all of his silver, which is wild. As long as I've known him, over a decade, he's had some silver in his back pocket in some capacity. So even he has said, you know what? This is kind of getting stretched at this point. I'm getting the heck out of Dodge. And then the big dog this year is platinum, up nearly 67% for the year. Dan, I know you have some thoughts on the metals because it's kind of hard not to. They are inescapable these days. I will also cheat again and bump up a question from our live chat. This comes from Option God. He wants to know, is it a big adios for gold and silver, Dan? So let's start there. Are you giving a big adios to any of these metals, and what's catching your eye in our year-to-date gainers, sir?
No, I don't think gold and silver are big adioses. In fact, I think they've gotten low enough to find some buyers. So I'm looking for follow through to the upside. And again, that 2 to 5 days that you and I were talking about, that comes into play here. If you look at the structure, the bias right now from these levels is for a move to the upside. And if we think about what's driving this, well, one, I think we do want to pay attention to silver even if you're just trading gold. Silver, although it's been sideways for a big chunk of this year, right now it could be the volatile out of the two. Silver sometimes can lead the way because it can be more volatile and more directional than gold. But I am not bearish on silver and I'm not bearish on gold. Gold right now is, again, they're both very similar. But here's the deal, the next couple days are going to be so important. If for gold, let's talk about gold. We want to be closing above 40.65 within the next 3 days. And if we don't, that implies a sideways market. Gold is such a unique market. We think we got retail paper, it comes into it, and that type of thing. And 70 to 80% of it's used for jewelry. And what's also interesting about gold, about 30 years ago, 2/3 of gold production came from South Africa. Now, every continent has gold production except Antarctica. The other thing that's changed in the gold market that I think you and I want to be sensitive to are central banks. Central banks, they buy about 1,000 tons of gold. And I remember a number of years ago, gosh, maybe 10, 15 years ago, being in Germany at Frankfurt, and I was teaching some courses for some banks. And I had a day free, and I went over to the Bundesbank to meet with a friend who I met. He came to some of my classes, but I was going there to have lunch, not business. And I have lunch with him and another analyst there. And we started talking about gold. I said, how much gold does a central bank need? The last country who had a currency that was backed by gold, that was Switzerland, 1999. And they don't do that anymore. So no currency is backed by gold. Is it psychological? It's just the idea of the store of value. That's the premise. And it feels a little good to have some of that. Is that it? Or is it something else? It may be those things. And by the way, in our conversation, none of us reached the conclusion because who knows? But the dollar, the US dollar, if you look at let's look at Russia, look at China. There's $300 billion of Russian assets that are being held because it was traded in US dollars. So what are these countries saying? Brazil also, India, they're saying we don't want to use the US dollar anymore because they can touch that. So, and 90% of international trade will use the US dollar someplace in there. Now, this isn't easy, what I'm going to say, but okay, we have Russia, I'm China, and I say to Russia, I'll buy some of your oil, although I shouldn't be, but I'm going to buy some of your oil because you give me a good deal. India's in that boat. India gets $30 off the max price. So economically, it's really a good deal to buy Russian crude. And I say, I don't want to do it in dollars. How about if we do it in rupees? How about if we do it in rubles? But someplace in that cross, they may touch the US dollars. Hmm. All right. How about if we do a gold transaction? I'll give you a dollar equivalent in gold. And it seems that's the underlying thought of countries that we're seeing in the central banks. If you look at the numbers, that the leader right now, this last quarter, the last quarter, gold central bank gold purchases were up 28%. And who was leading the pack? Kazakhstan. They're buying more gold last quarter than any other central bank. So that aspect is still a part of what you and I look at when we go with gold. So we have another trader out there, and it's the central banks. Do they move the gold market? I don't think there's a huge movement from them because it's deep enough to handle some of this, but they're there and it's growing. And I think you and I should pay attention to it. And then the gold market, the next 3 days, we'd like to see it moving by the close of Friday, ideally, to be above that 40.65. In silver, if we think about what's setting up there, let's talk about that one. Ideally, you want to be above 49, and we're like 47.62 right now. But we want to be above 49 within the next 3 days for that market. And the reason is you want it 3 days ago, 4 days ago, we had a nice move up. You want it to go out the way it came in. And if it does what I'm saying, you have that environment and we have a higher probability it'll continue to the upside. If it doesn't, look for a sideways move.
All right, Dan, we always look to our listeners for a little bit of fun. It is time for a real quick futures free-for-all.
Ring the bell. It's time to take on all comers in an epic Q&A battle royale. All questions can enter, but none can leave without an answer. It's time for the Futures Free-for-All.
All right, everybody, welcome to the Futures Free-for-All. And Dan, I thought we exhausted all of our questions here, but folks still coming at you. Here's an interesting one. We kind of touched on a little bit of this complex earlier, but if you have any additional thoughts you'd like to share, this comes from the Queen herself. She wants to know, what are Dan's thoughts on the crypto sell-off right now? Obviously, it's been troubled waters for a lot of the major crypto assets. We just talked about ETH pretty much erasing most of its gains for the year. Bitcoin breaking through 100K ever so briefly out there recently. What are your thoughts on, as she puts it, the crypto sell-off, Dan?
Well, it's nice to hear from the Queen. Hello, Queen. Well, what we're seeing here in Bitcoin, I think we've gotten low enough to find those buyers again. I feel like I'm saying that for every market, but we are seeing that. Today yesterday we got below the magic 100 or very close to it. And today we're bouncing back up a bit. It's what I call an equal and opposite. Now, for this market, we want to see it above 107,000 or really 108,000 within the next 2 days. If we get that kind of movement back up, then we have a chance for being a little more sustainable to the upside. If we don't, then I look for a sideways market. The reason for that is if you look at yesterday's movement, we fell out of bed yesterday. And if we come back up to that 107, 108,000 level quickly, like by the close of tomorrow, ideally, we have a market that as fast as it went down, it came back up, which is what I call rejection, which is a great way to start a move to the upside. I mean, really, who knows what the heck is driving this market fundamentally, really, when it comes to crypto? But this has potential for some movement to the upside. And we've seen that kind of behavior here before. So next couple days, this could be a low for that market. And I think the next few days is going to tell us, is that true? Or are we going to have a bit of a rally and then a sideways move? So 107,800 to 108 are the key levels, I think, that we want to see some movement through if this is going to go up.
And Dan, now they have Solana futures. You can add Solana to your list. Your crypto repertoire keeps growing, sir.
Yes, it does. It does.
Well, listeners, that music means this show is no longer growing, but you don't worry. If you want more in your lives, we'll be back in a little bit to break down the day's worth of activity on the Hot Options Report. And if you love the data we give you for free over there on the sister program to this one, This Week in Futures Options, you love that great report we give you there. Hey, we're doing something similar for the equity options markets. Check out that show to learn all about it. And Dan, where should they go if they want to learn all about all things Dan the Man Gramza and your views on, what is it, 7,000 markets?
No, it's about 22 markets. It's a free daily video that I do at dangramza.com. There's also a course that talks about the techniques that I use, and then also the trade management that surrounds those ideas. Because on the chart, you see a green line for buying, a red line for selling. A dash line means it's something that happened earlier in the week, and not buy and sell recommendations, but just sharing ideas that I'm looking at in those markets. And there's also an advanced video where we go through each of those 22 markets. And the free one will pick different ones that are moving so we can get a feel for what's going on in the market. But that's a possible choice. If you haven't looked at futures, it's another reference that you could look at on a daily basis. If the market's open, there's a video. And you can go back over 10 years if you want to see, okay, what was this guy saying when this happened? And you'll see how those red and green lines change over time. So that may be a resource to check out.
There you go. Check them out. Dan Gramza, GRAMZA.com is the place to go to learn more. Got to get on out of here. Back again in a little bit for the Hot Options Report. Back again tomorrow for the sibling program to this one, This Week in Futures Options. Make sure you're checking out the network wherever you get your favorite podcast. And then back again next week, another great episode of the Futures Rundown. Stay safe out there, everybody.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.